Very good afternoon to all the viewers today. Welcome to another session of Theme Talk. This time we take up the topic of consumer businesses, why consumer businesses is an investment opportunity. So with me, I have Amit Sinha to discuss this further. So Amit, as most of you will know, is our fund manager for our HDFC Non-Cyclical Consumer Fund and also the recently launched HDFC Innovation Fund. But it's, I think, too early to talk about the Innovation Fund. So today we'll talk about the non-cyclical consumer fund, but predominantly the theme. Amit, before I hand it over to you, just maybe a couple of minutes, I'll try and set the context so that it'll help, I believe. So consumption, as you're all aware, is a key sector as far as the economy is concerned, and also the listed space is concerned. Typically, consumer businesses give maybe greater visibility from an earnings perspective. Typically, these stocks also trade at a little bit of a premium as compared to many other sectors. That's the nature of the segment. But this also, I think, Amit, you can correct me, this sector also comes with a feature of not too much impact from a global uncertainty perspective, especially with too much happening on the global side, wars, tariffs. Or the global economic slowdown. It's more of an internally oriented sector from an economy point of view. That from that perspective, I think the sector is also insulated in a great way as compared to many other sectors that are there. Also, in the last 1 year or so, I think 1 year back, we had this little bit of a slowdown, especially on the rural or the mass consumption per se. I think the premium consumption part was doing pretty well, and there was a brief period when there was some slowdown from a mass consumption point of view. I think we are kind of staging a recovery from there. Uh, Precisely, we did have some kind of a boost or a kind of a positive development from a policy making perspective, especially from the budget. We received in terms of some tax breaks, especially for the from a mass consumption perception consumer perception perspective, because there's some from a tax bracket perspective, there was some leeway that was given. Interest rates have been lowered sequentially over the last 1 year. Monsoon this time has been reasonably good. The economic growth overall has also been reasonably good. So paving the way for a brighter prospects for consumption, at least from a medium to long term point of view. So at this juncture, Amit, I mean, a lot of questions come at an investor's mind. I mean, how is this theme positioned from a medium to long term, from a valuation perspective? Especially, most people believe that Indian markets are fairly priced or fully priced. There is no extremely cheaper segment from a valuation perspective within the Indian markets, barring a very few brief pockets here and there. From a valuation perspective, from a cyclicality perspective, from an earnings growth perspective, how is the theme or the segment position from a next 3 5 year point of view? That is a key questions. And also, I would like to ask, what are the key risks from here on for the segment as we speak? Also, if you can also cover, like, but we have this non-cyclical consumer fund. It's not, it's slightly different from a plain vanilla consumption fund. So how is it different? It's been 2 years, and I think the performance has been extremely good. You can cover that detail when in your segment, but you can start by maybe defining as to how you manage the portfolio from a non-cyclical parameters point of view, and also the overall segment in detail. So over to you, Amit. Yeah.
Thank you, Ram, and hi everyone. Good afternoon to all of you, and thanks for joining this webinar. So, in the next 20-25 minutes, I'll run you through the presentation. Ram has already set the context, so my job is a little easier. I'll run you through some of the incremental points, and how we see consumption at this juncture. And also, in terms of the fund performance itself, I think all of those details are there in the presentation. So without further ado, I'll start with the presentation. So if you, I think this is uh, the first slide, and this is a broad, kind of a very longer term kind of a thesis for consumption, which kind of we have been highlighting in the last 2 years. And Ram highlighted the performance of the fund has been pretty good in the last 2 years, but please note that consumption as a theme has done extremely well. Even if you look at from a 10 years, 15 years point of view, it has been one of the greatest compounding stories. And if you look at some of the compounders, I think the large part of the compounders are present. Large part of the stocks, which are the so-called compounders, are present in this segment. And the returns in the stocks have also, and the index has been very, very healthy, and over the longer period of time, 10 to 15 years kind of a period of time. uh, so, these are the five broader theses which we have kind of highlighted. And what we are kind of again repeating some of the points is clearly, if you look at the inflection point across multiple countries in consumption has come post $2,000, post crossing per capita income of $2,000. And now we are close to around $2,700. And there are few segments which are now kind of showing that inflection point, and we are seeing very strong set of growth in some of those segments, including consumer durables, e-commerce, and some of the kind of premium categories where we are seeing disproportionate growth, including to the tourism and the overall travel as a space. So I think that point is well accepted. I think there are multiple themes within this, kind of point where we have crossed as a country, we have crossed $2,500 mark in terms of per capita income, and there are multiple segments which are kind of into play, which are part of consumption broadly as a theme. Secondly, demographic dividend, as we all know, has been from an kind of young population point of view, and the dependency ratio also kind of declining significantly in terms of the income dependency ratio that has been declining significantly. Both of them augur very well for consumption. Third point is premiumization. I think this point has been well highlighted across multiple space. Most of the premium categories in the last 5 years, even post the pandemic, has done very well. This is a secular theme, and this is a kind of a multi-decade theme in our view. And if you look at the growth across most of the category, it has, it is a premium categories which have kind of grown much ahead of the overall category growth. And this should continue going forward as well. Formalization is also something which has been playing, especially after the GST and demon, and then was further helped by the pandemic. The organized sector has been growing much faster compared to the unorganized, and that has led to significantly higher growth for the organized space. And lastly, I think what has kind of changed, especially in the last 10 years, is the digitization has kind of completely kind of change the landscape, the consumption landscape overall, in terms of improving the access of products and services across the length and breadth of the country. I think that point is also something, a lot of the new age players, if you look at in the consumption side, they are product of digitization, and these some of these products are available across the lowest tier cities as well. So I think these are the five broad points which we are highlighting from a longer term point of view. Now, some of the incremental points, what we see, from a catalyst point of view, which we believe can help improve growth in the near to medium term. And I think, the broadly what we are highlighting out here, and some of the data is later in the presentation, but from a pointer point of view, if you look at last 5 years, overall consumption has lacked the economic, overall, the consumption growth has been below the economic growth. And I'll come to, some of those details later on in the presentation. Also, if you look at what has changed in the last few quarters, is that we have seen multiple things, and we believe that especially the mass consumption is at the cusp of recovery, and there are few pointers related to that. One is some of the government-led intervention, especially on the income tax side, and also some of the state government led welfare spending programs, which has started in the last few months. Inflation has come down. Inflation is one of the biggest bane for consumption as a whole, and after multiple after many years of high inflation, we are seeing lower inflation rate in the last few months. That augurs very good for consumption, especially the mass consumption going forward. Also, we are seeing, some of the other government, kind of led boost, especially in terms of the kind of rates coming down. The repo rates have reduced in the last few months, and also from a basically monsoon point of view, I think monsoon projections are pretty good this time around. Last crop, which was Rabi crop, that was good, and Kharif crop is also expected to be decent because of above average monsoon which is expected. And if you look at another point, if last few quarters have not been great in terms of the margin for the entire consumption space, and that was mainly because some of the imported inflation, as we say, for example, edible oil, and if you look at last year, crude was also at above $75 mark. I think both of them have shown signs of, kind of being kind at a downward trend, and that augurs again well for the overall sector margin, and also from an inflation point of view, that is good for the overall sector. And lastly, I would say that the from some of the other macro indicators, which include better liquidity in the system, which has been kind of infused by the RBI, and interest rate I talked about. But apart from that, also, from a macro point of view, a lot of macro related parameters from the country point of view is heading towards a better kind of a trend, which gives us the confidence that consumption should improve in the second half of this year. If we kind of combine all of these factor, and I think it is from a consumption point of view, it looks like that it is all set to recover in the second half of this year. Moving forward, I think some of the pointers which I talked about, these slides will talk about them in detail. So if you look at, here we have two charts. On the left-hand side, we have the US real consumption, trend, and on the right-hand side, it is India's private consumption trend. And clearly, if you look at from an Indian consumption point of view, the trend line is below the pandemic, below the pre-COVID trend. And that is also because of the fact that, US recovered, meaningfully in 2022, calendar year 2022. And one of the reasons for that was a significant stimulus from the US government during the pandemic, which helped the consumption trend to kind of come back to pre-pandemic levels. In India, that kind of a stimulus did not come through, and the pandemic-related, kind of job losses and pandemic-related, kind of overall consumption dip, that kind of continued in India, and that is something which we wanted to kind of highlight. Uh, if you look at from a overall, consumption contribution, I think consumption remains one of the top contributor to India's GDP. So private consumption, domestic private consumption contributes to 59% of India's GDP. And India is more more similar to US in that ways, where the economy is more consumption led. US also has a very high contribution of consumption in their GDP, almost close to around 68-69% of the GDP is consumption in US. If you look at the trend in the last few years, so FY24, if you look at, the private final consumption grew significantly slower compared to the overall GDP growth. But however, in the last 1 year, that has recovered. And we expect this to kind of continue to, kind of do, the private final consumption to continue to do better compared to the overall, GDP growth, even in FY26. And I think a large part of, if you look at this slide, there is a very beautiful correlation between government transfers. And when I say government transfer, it is basically the entire government related spending, whether it comes through multiple schemes or MSP programs, etc., etc. All the government related, both central government and the state government related schemes related spending, they are broadly the government transfer. And government transfers, growth has been directly correlated, has been, the correlation has been very high for consumption, overall. And that is something which we wanted to highlight in this slide. And I think in the last 3-4 years, especially after FY19 20, I think, the government transfers have kind of come down, which are now starting to, from FY25 26 levels, the first few months of 26, that has started to kind of inch up, and that augurs again well for the overall consumption trend. This slide talks about some of the state government related welfare spending programs which have started in the last few months. All of them put together are now close to around 3 lakh crore. And I'm talking about the schemes which were started by Maharashtra, and some of the other states like Madhya Pradesh, Karnataka, Telangana, Andhra. These were, some of them were, women-centric welfare spend started by the state government. And the budget is pretty large, if you look at the total number. And this, with the ongoing, basically with the some of the larger states getting into election later during this year and in 2026 and then in 2027. I think this is a trend which can continue even going forward. So this is something which can be pretty beneficial from the overall mass consumption point of view. Also, I think Ram talked about the income tax related, relief which the central government kind of provided during the union budget. And this slide talks about it. There was a total of 1 lakh crore tax foregone, during the union budget, and that is all, kind of should help in boosting consumption. Obviously, this is all something which will come with a lag. So, this was effective 1st of April, but from a consumption point of view, some of these will trickle down in terms of the consumption with some lag. In terms of inflation, which, as a consumer analyst, and I have been tracking this sector for more than a decade now, I have always, kind of found inflation as one of the very, very important parameter. And a low inflation is a very strong indicator for, the consumption boost with a lag. So in the last 3, 4, 5 months, if you look at clearly the inflation, kind of has started kind of coming down. And also the indicators for forward-looking inflation, if you look at, so for example, the food inflation, it is dependent on the food production itself. And with a prediction of a good, monsoons, this time around the crop is expected to be good, and that augurs well for the near term food inflation. Also from an imported inflation point of view, that is crude and palm oil, etc. Most of these commodity basket, they are in terms of the pricing, they are lower compared to last 1 year average. And that also augurs well for the overall inflation going forward. So that is something which is for me, it is a big booster for mass consumption. And some of that we are already seeing in the numbers. So I'll kind of run you through some of the other indicators which I believe is very important from a rural consumption point of view. And these are some of the charts which talk about uh, crude levels and the palm oil prices. If you look at from a 1 year, kind of point of view, the overall average rates are significantly lower compared to last 1 year average. Similarly, palm oil, which peaked in November, December, sequentially has been kind of coming down in terms of the levels. Uh, Also, I think, here, this is a very important parameter again. If you look at the real rural wage growth, after multiple quarters of, very low numbers, what we are seeing in the last few months, this might be a 3, 4 months kind of a data. The real wage growth, rural wage growth has been kind of improving, which is very, very important parameter again from a rural consumption point of view. And also some of the company commentaries, if you look at, some of the company, they have already kind of come up with their quarterly update. This is as, kind of recent as July, and they have commented on the mass consumption and especially the rural consumption looking pretty well. Also, some of the companies have in their commentary, they have very clearly highlighted that the pain in the urban consumption is now kind of coming down. So I think if you look at FY25 and especially the second half of FY25, urban consumption was clearly impacted. and there were multiple reasons for that. But I think some of that is now behind us, and the companies are seeing, urban consumption, also the mass consumption in urban also to kind of now picking up sequentially. So I think, all of these augur well. Now coming to, those were some of the pointers which I wanted to highlight. Now coming to our fund details itself, and as again, as the name itself suggests, we run a non-cyclical consumer theme, and most of the themes which are included out here, they are structural, non-cyclical in nature. And some of them, some of the pointers which I wanted to highlight, what are included in the theme. Again, consumption as a theme is very, very diverse, I would say, and a lot of sectors are included out here, which includes, FMCG broadly, and then there is a consumer durables as a segment. Consumer services is also part of it, which includes retail, leisure, etc. Basically, some of the travel related and other themes are also part of it. QSRs are part of it. Media, entertainment, that is part of it. And telecommunication is also part of it. Healthcare services is also part of it, and that includes your the the hospitals and the diagnostics, etc. What is not included in our theme is autos, and real estate, and power. So these are, these three sectors are part of the Nifty India consumption overall, but they are not included in our theme, which is a non-cyclical consumer theme. And talking about the valuations, I think, broadly the sector is trading at around a 5-year average, kind of numbers. And, I think what is very kind of evident, and, some of the companies, if you look at, I think what comes out very, very clearly is that the health of the sector has been pretty good, and if you look at the overall return ratios, return on equity and return on capital employed, and dividend payout, etc. of the sector has been one of the best, and uh, definitely higher compared to let's say the Nifty 50 levels. Also, what this sector kind of brings to the table is a very high visibility of earnings, which you will appreciate that is not there in every sector, right? And the sector being predominantly domestic, the it also kind of kind of takes care, or kind of excludes some of the uncertainty which comes with the global kind of volatility. And especially in the last 6 months, we all have been we all are aware how volatile the global space has been in terms of the regulatory kind of paradigm, in terms of the US setting tariffs, and some of the other things which can change dramatically. I think from that perspective, those volatility is lesser in the sector, and that results in higher visibility of earnings. And the government intervention is less, in terms of the regulation, etc. is significantly lower, because most of these players are kind of free market, or kind of operating without any particular government kind of price setting, etc. And yeah, as in terms of in terms of the overall leverage, in terms of the overall balance sheet health also. Now coming to some of the performance related, and the fund related details, other, sector wise fund related details. So our fund is, if you look at the stocks and which is, kind of publicly available, we are very well positioned in, I would say, three, four broader spaces. And one is we are overweight on the mass consumption, so which includes FMCG and some of the mass retailer also, I would say. Retailers which are, I would say, the value retailers and cater to the mass demand overall. And FMCG, we are overweight on that bucket. And this is, completely in line with our thesis of mass consumption turning around this year, which we expect to happen starting second half of this year. So that is one sector. We are also, kind of overweight on the healthcare services, so which include, diagnostic space, and which include hospitals, diagnostics, and some of the other healthcare, kind of related providers. So we are overweight there. We are also overweight on the travel and leisure services. That is an area where we are bullish on the from a longer term perspective. So these are three areas, and also we are bullish on the new age companies, and some of the the e-commerce and the the basically the quick commerce space, as we call it. So these are the four areas where we are broadly kind of bullish, from a sector's point of view and positioning point of view in the space. And performance wise, I think we launched the fund in July of 2023, and 2 years CAGR return has been pretty handsome, 19.33%. And we have done better compared to the benchmark. The last 2 years have been pretty good from a fund perspective, and we have outperformed the benchmark as well. And coming to some of the risks, so I think, clearly from a risk point of view, as I was highlighting, I think what to me is the biggest, kind of a tailwind, that is inflation. If inflation does not remain benign, and if there is a very high level of inflation which comes in, that will be a risk to the thesis. But it doesn't look like the case. As I told you, some of the pillars of low inflation are, there in place at this point of time. But that remains a risk in my view. Second is, this sector has a high dependence on some of the raw materials, including, the crude derivatives, and the palm oil and the palm oil derivatives. I think, a very sharp inflation there can lead to erosion in margin of the sector. So I think that is also something which I would highlight as a risk. And overall economy, kind of again, not growing in line with what is projected at this point of time. That is a macro risk, but not specific to the sector, but being this being largely a domestic oriented sector, the overall macro related risk will always be there in the sector from a domestic point of view. Yeah, so these are some of the, kind of broader risk which I would like to highlight from a thesis point of view. And yeah, I think, lastly, I would say that this is a summary slide in terms of what we kind of talked about in the last few minutes, which is basically the some of the longer term drivers of consumption, which I highlighted, and also, I talked about what are the near-term triggers and catalyst, which includes a low inflation, a very benign inflation regime, which we are seeing at this point of time. The government-led intervention, both from the state government as well as the central government, and a very good macro which is there, with the rates coming down, and basically liquidity being high in the overall system now, and the rural kind of also rural consumption now starting to look much better. And then I kind of spoke about, and then I discussed the health of the sector and why this sector deserves a higher valuation, because of the higher return ratios and lower volatility and high visibility of earnings over a period of time. And then we talked about the fund itself and the performance. So with that, I'll kind of end the presentation and hand it over to Ram. Over to you, Ram.
Thanks, Amit. I think very clearly explained. I think if I have to summarize, I think this is a sector that has a huge runway ahead for the next 10, 15, 20, 25 years maybe, because India is on a growth path and consumption sector is a key pillar of that economic growth. And it is also a great investment opportunity. So why not participate in that? I think uh, Amit, I think I will ask you first question is that you mentioned you started off by mentioning the per capita potential. I mean, India is still not very high in terms of the per capita or the income levels that are there as compared to many other economies, even Asian countries for that matter. I think we are at maybe 2,700, 800 per capita. I mean, it's all often talked about that there is kind of tipping point. I mean, maybe if we reach that 5,000 level or 6,000 levels of per capita, there will be a tipping point when it comes to consumption, when there is probably a blowout kind of a consumption. A lot of consumption will happen, and that's when the real game will actually happen. I mean, are we near that tipping point or how far? I mean, if as an investor, if we have to kind of capitalize on that, I mean, how far is that event or series of events away from us?
So Ram, if you look at in one of the, so this presentation does not have that slide, but in our NFO presentation of consumption, we had highlighted this point that when China went up, when Chinese economy saw per capita moving up from $2,500 to $5,000. Their consumption growth rate was close to around 15% odd CAGR, which was a very high number. So I think it is we are expected to cross $5,000 per capita by 2030. India, somewhere around 2030, 31. And that I think from here on to the next 5 years are gonna be very interesting. So it is, the growth rates will be different. I'm not highlighting that we will grow, let's say, similar to what China did. But I think there is an inflection point which every other country, not only China, but Vietnam and other Asian countries, as you highlighted, every other country has seen that kind of an inflection point in consumption, and premiumization. The sectors will be probably the some of the premium sectors which are not well penetrated. Some of those sectors will see disproportionate growth. uh, from here to 2030 looks like a period where you can see some of these sectors kind of seeing inflection point in terms of the growth rate, breakthrough growth rate coming in. Yeah.
Thanks, Amit. Uh, Next, I would like to focus on this premiumization concept, which you elaborated very well in the presentation. I mean, I mean, when it comes to various segments, be it cars, I mean, SUVs have been more popular in the last few years. When it comes to the mobile phones, I mean, a lot of people are actually buying the 1 lakh and the premium phones. Even product segments like shoes or the clothes we wear, or so the premiumization looks to be actually happening. Even in one of the presentations, we showed the example of the detergent, in terms of how people migrate to a better quality detergent in terms of the premium. It's an aspirational India out there. I mean, people want to go and enjoy that premium experience in most product categories that they can. From a portfolio positioning point of view, from our non-cyclical fund positioning, how much is that a key consideration when you select stocks, that how much of this company is catering to the premium segment, or is do you have such criteria when you build your portfolio?
No, clearly, I think, that is a phenomena, that is a trend which is hard to ignore. And when you have some of these segments, kind of, the premium segments doing extremely well, you clearly highlighted some of the examples. But if you look at across the sectors, whether it is travel, tourism, if you look at hotels, the five-star hotels are doing much better in terms of, the overall RevPAR, as we call them, the overall top line growth or bottom line growth compared to, let's say, the economy hotels. And similarly, you gave examples of cars. There are other FMCG plays also, where if the player is over indexed in terms of the premium portfolio, though those players have grown faster, in the last few years. So I think clearly, that is there in the, one of the clear criteria which is there in terms of the selection of the stocks. Very important, I would say. But I would also kind of flip it around, that now, I one of the thesis which we are highlighting, and probably during the course of the presentation I said one thing, that starting this year, FY26, you are going to see the return of the mass consumption also. And that is something which needs to be there. And it is something which we are highlighting, and we are positioning our portfolio, that this year, FY26, you will see the mass consumption to be kind of becoming a major theme, which was not there in the last 5 years. The rural related consumption, and the mass retailer, it may be rural and urban both, because mass consumption is across the geography and across the segments. And so that can return, and it has been an underperformer over the last few years, but you can see a recovery coming in this year.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.